Hi, it's Seay from Seay Real Estate here in Richmond, Virginia. And this week I want to talk to you about a topic that applies to a relatively low percentage of our population, but in certain circumstances it can be an important topic, one that people will appreciate learning about, I suspect. And that is the idea of owner financing. Every now and then I'll put a house up for sale, or I'll be talking with someone about that who perhaps owns it as a rental property. Perhaps someone who owns multiple rental properties and they are along in years and wanting to liquidate what they have as far as real estate investments go, but they're concerned about the tax liability they'll have, the capital gains tax they'll have to pay upon selling those properties. And one remedy or one avenue that can soften that blow, if you will, is the idea of owner financing, whereby that property owner, if they were to just sell it all at once, receive all the cash, they could have a certain tax liability. If they choose another path where they sell it to someone, finance it themselves, allow that buyer to make payments to them monthly, perhaps with a sizable down payment, it can lessen the load as far as taxes go. It can make it so that they don't have as much to pay right then. Not only that, but if they were to sell it, receive all the cash at once, they have to think about where they'll invest it next and what sort of return they might get. With owner financing, they may receive a 10% or higher down payment, maybe even less. And receiving those monthly payments, in essence, they're earning a much higher interest rate than their funds would receive in the bank if they received it all at once. And they still have a claim on that property, whereby if the owner, the new owner, who's now making payments to the old owner, stops making payments, the person can foreclose on the property, sell it again for another down payment, and continue to earn that higher rate of interest than they would if it were sitting in an account somewhere, and not have the tax liability that they would have if they received all the cash at once. So just some food for thought. Of course, you'll want to talk to your CPA for all the ins and outs of that, a good attorney to structure the terms of that note and the repayment. But I thought I'd throw that out there this week as some food for thought, because I think in certain circumstances it can really be a good answer for many sellers. You'll want to be careful about who you're selling your house to. Make sure they have good credit, you're comfortable with the situation, but in the right situation, it can be a really good alternative. Thanks so much. Have a great week.